Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Steven Ehrlich, director of research, digital assets at Forbes Crypto, to discuss what it will take for Bitcoin to break its correlation with tech stocks. Steven, it's great to see you as always. Welcome back to Trade Talks. Let's start with some background first. Bitcoin, of course, dropped back under 30,000. What does that mean? What are you hearing?
Yeah, thanks, Jill, and thanks for having me back again. So, thanks for having, excuse me. Thanks for having me back again. So Bitcoin did drop a bit under 30,000 again today, and honestly, it was a little bit disappointing to investors. It had climbed back up over around 30,000, 31,000 when after falling to about 25,000 earlier last week. And right now, what we're trying to figure out is what's the short-term direction for Bitcoin. If you look at some of the technical charts, you get a sense that we could be looking at a little bit of a bump. Some of the momentum indicators that I look at, such as Bollinger Bands and the relative strength index, suggest that Bitcoin has been a little bit oversold, which indicates that we could be looking at a small jump, maybe into the mid 30s or so. But at the same point, we are very much in a clear downward trend. And even if there is a small bump, that doesn't necessarily mean that we are going to be having it doesn't necessarily mean that we're going to be seeing 40,000 or 50,000 or anything like that anytime soon. And there is a small chance that we could be looking at further downgrades. For instance, most people remember the ICO crash back in early 2018 when Bitcoin lost about 75% of its value. What they don't necessarily remember is that in November of that year, it lost another 50%, going from around 6,000 to 3,000 or so. And so there is also that chance. We're seeing some technical trends as well. My team suggesting that we could be looking at a downward movement that way as well. So people are still a little bit skittish. They're cautiously optimistic, but they are a little bit nervous about what direction the market's going to go next.
Right. Well, it's the same conversation we're having around equities. You know, it feels oversold. Everyone's still waiting for that capitulation point. So it doesn't sound like it's much different than the narrative that we're hearing in the equity marketplace. So Steven, with that said, how are investors repositioning themselves in this market, or how are they positioning themselves? There are a lot of new institutional entrants and a lot of people thinking about getting in at this point, as we have seen the sell-off. So what are they doing?
Yeah, so there definitely is a clear flight to safety. There's a couple of data points that really kind of signal that trend. For one, looking at the stablecoin market in particular, we've seen about $10 billion worth of redemptions on Tether. We've seen a pretty dramatic drop, I think, from about 83 billion to about a $73 billion market cap in Tether, which is the world's largest stablecoin. It's it's pegged to the US dollar, but it's been controversial at times because the company behind it is a little bit has been a little bit opaque with the exact constitution of its reserves. This money has been moving into a different stable coin called USDC or USD coin, which is seen as a bit more regulated, a bit safer, and that's been climbing up. But aside from that, I mean, looking at certain charts, I mean, Bitcoin has outperformed virtually every major alternative currency, altcoin this year. It doesn't mean Bitcoin's positive. It's down 20-30% or so, but most of the other major altcoins are down even further. And then on top of that too, I mean, looking at other charts such as the relationship between Bitcoin and Ethereum, Bitcoin is gaining on Ethereum. Ethereum is seen as sort of a proxy for growth stocks, excuse me, a proxy for risk taking on risk appetite. So when Bitcoin gains, that suggests that it is that investors are getting a little bit skittish and they want to move back into safety. So there's definitely a bit of a retrenchment going on. And right now, the question really is going to be, what are going to be those new sources of value that are going to help crypto recover from this and move forward? After every single crash that crypto has had, basically since its existence, it's always found a way to rebound, catapult forward, often on the back of new innovations such as DeFi or better smart contract programming, security audits, safer regulated exchanges. So that's what people are thinking about right now.
Right. Steven, the question is, of course, what will it take for Bitcoin to break its correlation with tech stocks? Because to your point before, it was innovation or new projects or new use cases that really was the next leg up, the next catalyst. And we were all waiting for institutional adoption. And now we have it. And now it feels like Bitcoin is trading like a traditional asset class and highly correlated to what we're seeing with Nasdaq 100 stocks and tech stocks in general. So does that correlation break? Is innovation going to be the thing that propels it forward?
Yeah, it really is kind of funny. Everyone waited and waited and waited for this institutional money to come in. And then when it came in, people like the price going up. But now that tech stocks are going down, they don't like Bitcoin going down with it, despite the fact that we have record inflation, really the highest inflation that we've had in about 40 years. It makes sense for why this is happening. Institutional money has a certain way of looking at the market, and crypto, especially because of its exorbitant returns. The closest approximation that they have is the tech stocks. Of course, hopefully that cycle will break. For a while, it was relatively uncorrelated because most of the people that owned Bitcoin were real ideologues that had strong convictions about its utility as a payment system, a censorship-resistant payment system. That's not necessarily the case anymore. People look at it as an investment, and I think one of the trends that's really going to have to happen for Bitcoin to break that correlation with tech stocks is that we're going to have to see decentralized applications, mature ones, like the killer apps, grow on top of multi-purpose or multi-computational blockchains like Ethereum, Solana, Algorand, Cardano, et cetera, that offer a more apples to apples comparison to a Twitter or to a Google or a Facebook or a Snapchat. And those are the stocks that theoretically should be much more correlated with those are the tokens that should be much more correlated with growth stocks than Bitcoin. But until we get to that point, which still could probably be a couple of years away, I anticipate Bitcoin to be highly correlated with growth stocks for the foreseeable future.
I wonder if it's a case to be careful what you wish for one of those circumstances, because it, in a way, and Steven, you're the expert here, it almost feels unfair for people who evangelize digital assets or who really believe in the use cases and the technology behind it, to just see it become so highly correlated to what's happening in the stock market. It doesn't feel like that's what its intention was. Am I completely off base here, or is that making any kind of sense at all?
Sure. I mean that certainly is not what that's not what the intention was. I don't think that many people really complain too much about Bitcoin going up and up and up to about 70,000 or so.
Yeah, but it also did go down, 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 down too.
Yeah, but then when it goes down, 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 then they say, well, I wish it was uncorrelated.
Right.
Honestly, I think this is just a necessary step in crypto's maturation and adoption. Like as people get more comfortable with the asset, its intrinsic value, it'll start to be appreciated for what it is and what it's not. We see a similar trend with crypto proxy stocks like Coinbase and MicroStrategy and the dozens of publicly traded Bitcoin miners out there that trade very little on their fundamentals and much more on just emotion and sentiment. And hopefully, as this market matures, we'll have much more discerning analysts look at these stocks, look at these assets, so that people can really find the appropriate proportions of them to allocate into their portfolios.
Right. Well thought out. Thank you, Steven. We appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great. Thanks, Jill.